Yes, it is Tuesday, and as you know, it is time for our weekly insert every Tuesday, happening here with Lunar Capital. This weekly market and investment slot is brought to you by Lunar Capital. Lunar Capital is a registered financial services provider, and they provide local and offshore investments. Let's welcome Sabir Munshi to the show. Sabir, good morning. How are you doing this morning?
I'm very well, Nazia. All the better for being on Eastwave again. So Tuesdays are definitely one of the highlights of my week.
Absolutely. We so look forward to it, especially since we know we're going to be going through a whole learning experience with you. Let's get into it, Sabir. Last week, you gave us an overview of the different investment avenues. You indicated that we will dive into unit trust this week. So let's take that deep dive. What are we talking regarding unit trust this week?
Okay, so let's start with defining what a unit trust is, okay? So effectively, a unit trust is a pooled investment, okay? So a number of investors basically pool their investments into a fund that is called a unit trust. It's also called a collective investment scheme, and that's the official name which is given by the Financial Services Conduct Authority. The FSCA, the Financial Services Conduct Authority, is basically the regulatory body for financial services companies like Lunar Capital, as well as collective investment schemes or unit trust. Okay, so let's get back to the pooled investments. Okay, so a company like Lunar Capital will identify a need amongst their client base, right? So, for example, they might be insufficiently invested for their retirement funds, or they might have a need to have more offshore investments, or they need to park some money, for short term. So once that is defined, effectively what a company like Lunar Capital would do is it could basically try and establish a unit trust and invite its clients to pool their investments into that unit trust. So once the clients have pooled their investments, effectively what happens is that they put funds in there, and for that they get units in the unit trust. Okay, and the units have a value. So, say for example, if the pooled investment is worth, let's say, 10 million rand. That's what it started with, and there were, let's say, 1 million clients. Okay. Then effectively each unit will be worth 10 rand. Okay. Now that effectively gives you a starting value of what the unit trust is. Now, of course, then a company like Lunar Capital would have a mandate, and that mandate would be we want 60% offshore, we want 40% locally, we want no more than a certain percentage in a single stock, as well as possibly maybe having certain conditions like no gambling, no booze, kind of companies. Okay, so then Lunar Capital would basically take that 10 million rand and invest that. Okay, so that investment would then basically go up or down. And as that investment goes up or down, effectively the value of the units go up or down. So let's say, for example, the investment takes the investment from 10 million rand to 11 million rand. Now, previously you would have owned a unit worth 10 rand. Now your units are worth 11 rand. Okay.
Okay, so Sabir, this would mean that the investors pool their funds into a unit trust and now own units. But what happens to the funds in the unit trust?
Okay, so that's where a company like Lunar Capital comes in. Okay, and that's, as I said earlier, what we would do is we would start investing that. Okay, based on what the mandate of the fund is. Okay, so and remember when I spoke to you last week, I said, how can, how does an investor make money? Okay. Obviously, they make money based on, any interest that's earned on investments that earn interest. Companies pay dividends, they would earn dividends. And then obviously, the underlying value of the companies that they invested in can go up or down. So, for example, they might invest in a company like ShopRite, okay? ShopRite might come out with results, okay, and those results are pretty good, and the market will say, okay, ShopRite is trading at 120 Rand, we think it actually is worth 150 Rand. It might not go up immediately up to 150 Rand, but it might go up to 130 Rand. So the underlying investments, basically, would go up. So what Lunar Capital would then do is basically they would either, if they don't have any ShopRites, they might choose to buy some ShopRites. If they had it, they might keep it. If they think the share is not a good share to hold anymore, they might sell it. Okay. So obviously we would then basically, decide on how to deploy, the underlying funds, in the unit trust. Now the nice thing about that, is that, if the investment mandate is long term, then generally investors can continue to invest in that fund. Okay, so for example, they might be able to basically invest through a debit order, a monthly debit order. So what happens is that every single month, what would happen is that, when the client makes an additional investment, a debit order investment, the underlying values of the fund, would be determined. And, as I said, it started at 10 Rand, maybe it went to 11 Rand, but now it's gone down to 10 Rand 90, for example. So those funds then would be purchased at 10 Rand 90. Okay, so and the nice thing about that is that investors can come in at any point in time, and certainly also leave at any point in time.
Sabir, what rights does the unit holder or investor then have?
Yes, okay. So the wonderful thing about unit trust, right, is that as with many financial services investments, it is regulated by the FSCA, as I've mentioned. And the FSCA basically makes certain conditions, very strict. So, for example, one of the things is that, somebody could say, but, can the asset manager or the investment manager inflate the underlying prices, of the underlying investments? And the reality is they can't. Okay, so, we would only be able to invest in, for example, regulated companies, like companies that are listed on the Johannesburg Stock Exchange or the New York Stock Exchange or maybe even the Amsterdam Stock Exchange. So it's all regulated, and they, the underlying values, of those can be determined by, the prices that, those stocks can be traded at those particular point in time. So firstly, one of the rights is that, an independent party will basically value the underlying funds. Secondly, investors can take their money out at any point in time. So say, for example, you had a short-term investment and you're looking to take your money out, or it's a long-term investment and now you need that money for your retirement. You can start withdrawing that money, either in regular monthly withdrawals or in one-time withdrawals, and you can take your money out at any point in time. And typically, most unit trusts will pay that out within 2 days. So there's lots of strong regulations around this. Firstly, what asset managers can do, how they value the underlying funds, where they invest in, and then secondly, how investors can come in, and the prices at which they can come in, and certainly the prices at which they can come go out of.
Sabir, thank you so much. We've run out of time for today, but can we tackle some additional questions on unit trusts at next week's session?
100%. Let's do that. We can cover things like costs. We can cover things like the different types of unit trusts that you can get, and there's a lot that we can talk. And let's chat again next week.
Thank you so much, Sabir. For more information on Lunar Capital's investment products, visit them at www.lunarcapital.co.za. That's Lunar Capital, one word, or email them at info@lunarcapital.co.za. Sabir from Lunar Capital will be back with us next Tuesday. Thank you so much again to the team at Lunar Capital.